So I recently read that there are around 500 personal finance.
Okay, welcome everyone. It's been a while. Good to have you here. We're gonna start counting some waves on the chart. Welcome. Good to have you here. And in today's live stream, we're gonna count some Elliott waves, right? Analyze the charts. I have some new counts, and instead of doing a video, I decided to do a live stream because it's been a while. Now I have 1 hour, actually to be exact, I have 1 hour because we go for lunch with family, so won't be home in an hour's time, but we have enough to cover everything. And I'll be showing you my updated Elliott Wave scenarios, a summary as well, and then of course answer questions, right? Gonna pop out the chat, put the chat on the screen. Welcome everyone. Good to have you here. It's been a while. What's up, Sam? How you doing? Yeah, welcome. So, hopefully everyone is doing magnificent. I am. Now let me tell you something. So, guys, I gotta put it on webcam shortly before we begin. So. Right, this is a cookie, okay? It's not just a cookie. It's a cookie that my wife made. And, you know, she likes to bake now and then. I'm not kidding that when we ate these cookies, we were like, damn, these are so good. We might as well sell them as a business. So now we are thinking like, you know, how could we maybe even like produce these type of things in batches? Probably we have to start in our kitchen and then eventually expand. But man, these cookies are so good. And they're healthy as well, by the way. No added sugar, yo. A little bit of syrup, maple syrup, but that's it. Like, incredible. Lovely. I love cookies. Hope you aren't AI faking. I'm not. Side note as well, by the way, we're almost at 20,000 subscribers, which is incredible. Incredible. I mean, the journey started, of course, in 2023 with YouTube, right? So this is where the channel launched officially, the 21st of February. Before that, it was silent, like nothing happened. I made it. But we started here in 2023 and holy moly, almost at 20,000 subscribers, which is incredible. So thanks everyone for being here, enjoying the analysis, right? As I always say, hopefully it's valuable and helpful and you enjoy the Elliott Wave analysis. But yeah, I never thought that when I started the channel, just to share what I am doing myself anyway, as I'm analyzing the chart for myself, I might as well share it. And there were a couple of other reasons to start the YouTube channel, because I thought there was a lack of channels on YouTube that really stuck to the rules and the guidelines of Elliott Waves. And I saw mistakes all the time. And I was like, yeah, I'm not having this. So let me just start my own channel and actually stick to it. Stick to the rules and the guidelines, as I do myself anyway. And now here we are, almost 20,000. So yo, really, really cool. Welcome everyone. Itachi, Kevin, lovely pump. Indeed. Thank you, Itachi. DOG, I'll be replying to you this weekend. It's actually quite exciting what I want to share with you, because it is something that we are actually, DOG, preparing for next year, to be honest. But I do have an idea of how I want to approach what I'm going to talk to you about in the DM. So it's going to be cool. Happy Violence, welcome live from once. Hey, Australia. There's actually quite a lot of viewers from the other side of the world there. QZ World, welcome. I don't know why my scrolling here is not working. Happy Baldy. Marking is correct. We'll see. You can double check now that I'm online. Ben, how you doing? Welcome. Dario, welcome. Why do you say voila? I don't actually. I say hello. Hello, everyone. Sam, when live in French. Ooh, give me a couple of years, Ben. Sid, welcome. Nice uptrend. Obese Balls, what's up? Colin, WXYZ, Roland. Okay, shall we start? Because I have some updated Elliott Wave scenarios for you. Okay, now at the end of this live stream, you should be able to understand this. Now, here you go, Elliott Waves in a nutshell. Yeah. So you'll be able to understand what this is. And you're going to understand it because we're going to go through different Elliott Wave scenarios. And then the scenarios basically merge together in the summary. Right, so basically in a relatively short term, we expect upwards movement, right? So at least like preferably another leg up. After that, it becomes a bit more tricky, either downwards into up or upwards into down. And we'll have to wait and see what price does. And then here range, or you get a move down. Now, of course, there's a bullish scenario where you continue towards the upside. It's just not at the moment really my preferred scenario. So okay, let's start. And what I want to start with is this range. Now, when price was falling to the downside and we started this range, if you were watching my channel by probably about Monday the 18th, the update that I shared, I counted this structure preferably as a triangle. When I looked at the subwaves here, an A, B, C, D, E wave structure, right? And this morning, when I did my analysis, I kind of came back to this move to the downside, recounted some things, and I preferably count it as either an ABC, right, or possibly a WXY. But let me start with the ABC, which is what you see here on my chart. This is one of the 4 scenarios I'd like to present to you. But then again, at the end of the video, right, stick around because it's going to be simple because of this. You'll understand this. And basically the summary is going to merge the different scenarios into a directional bias per block, right? Per color block. So first I want to talk you through some of the ideas that I designed this morning. So cool. First of all, we have a double zigzag to the downside. This is a sharp corrective structure to the downside, right? Where the first move down is then labeled as an ABC. Now, in this particular case, wave B is a triangle, right? As per the video on Monday the 18th, where I started thinking about the triangle, I came back to that triangle. And then we have the move to the downside, five-wave structure. Now, you have to end wave C in this particular case at this low. You can't end it here because then there's overlap between your 1 and your 4, which is not allowed. In an impulse, at least, that's not allowed. Of course, in a diagonal it is, but we'll get to the diagonal in a second because that's coming next. So in this particular case here, the move to the upside that we had yesterday is labeled a wave C, right? Not a wave A, not a wave 1. Labeling it as an A or a 1 is more bullish. We'll get to that because for the bullish scenario, time is very important, okay? But again, I'll explain that at the end. So in this case, ABC, right? Which finishes a first structure out of a bigger three-wave. Because mind you, W, X, Y, inside X, we preferably get a bit of a larger structure, right? Because we want, I should remember to not say right. I don't know, that slipped in. So we take a fib time from the start to the end of W. We double click. We toggle on the 0.382, the vertical line here on my chart. And you can see that this high was made before the 382. So preferably your wave X is not yet finished. And you're going to continue ranging for wave X, which therefore means, sure, after a move up, we expect a bit of a retracement, but we're expecting another leg towards the upside in a wave X. Now, wave X can be any corrective structure. However, as it starts with a flat ABC, and we're looking for a larger structure in time, because this is a flat, preferably, you're looking at a sideways WXY, with an alternative scenario being an A, B, C flat structure, where wave B is going to move into some lower support, and then you get C up. But the general bias doesn't change, that you're looking for a larger corrective structure. I just put the WXY on my chart, but you can also have an ABC flat where you take out the low once more, and then you move up into a wave C, which then after C, you look for a drop, okay? So, of course, the exact counts here, the ABCs you see to the downside, right? That's just to show you the bias of the movements, right? It doesn't necessarily mean it's the exact structure that we get, because of course we first have to wait, is this going to be a 5? If so, we could label it an A, look for a B, get a C down, right? So need a bit more patience. But the general idea is the same. Look for a larger X to form. Up, down, up, finish X. Now in a double zigzag, preferably you don't touch the 0.7 at 120. And so preferably you don't reach it, and then after X you move down for wave Y, which then in a double zigzag structure has to be a zigzag. So you're going to be looking for wave A, B, C. Target for wave C, 105 to 102. And if I open my levels, you can actually see how the how my drawing, my art, is hovering or moving around my levels. Let me just put everything on the chart. So you can see here to the downside. Let me open. Wait, why am I missing? Oh, wait, I'm missing this one here. I think, is it? Yeah, there you go. So clean up a little bit. So like to the downside, we have the top of a gap on the 15-minute time frame. Could act as a little bit of support, get a bit of a bounce, another leg to the downside into some support that we have below, which is a point of control. Move up afterwards. We have not yet touched the resistance here at 117.7, 118.4K, which is definitely an area I expect to see touched at some point. And in this particular scenario, that could be the high of your wave X, after which you then move down, touch support at 111, move up. This wave B could then find resistance at the point of control of this range, right? Which is probably going to be somewhere in the middle. And then you get a wave C to the downside, moving to the monthly point of control. And the monthly point of control is sitting at 105K. After 105, you look for price to then continue towards the upside, because after a WXY, you look for price to take out the all-time high. Okay, so this is the first scenario I like to present to you. So in this particular case, we go sideways for a little bit longer. and eventually see a move down, okay? And we get to another one here. Okay, so this is once more a WXY, but this is a sideways WXY. But the general bias in the short term is the same. You have a move up, you have a move down, but then the second leg towards the upside is moving above resistance, preferably goes to around 120, 121. That's the difference with the previous scenario, which then also means that preferably we're looking at a different structure afterwards. Okay, which is more of a ranging structure. So the ABC is the same with the triangle in B. You get your move down, that's your W. This is a flat in W, right? Internal count of your wave X. This wave X preferably finishes after the vertical line, right? It's the same as the previous scenario. And in this particular scenario, we then look for a move down and then a move up. Preferably it doesn't go too deep and the invalid, yeah, I mean, it's preferably you don't take out the low. But you test some support and then you move up. Now, the support to the downside that is interesting in this particular case is the 15-minute top of the gap. And then we have the range point of control here at 113.4K. That's the dotted line. Right? And then we want price to move up. And inside this wave X, we then have a flat, that's a W. You get your wave X and then a zigzag in a wave Y, right? So it's I mean, generally it's more of a sideways structure. In this case, it would be more of a movement towards the upside, but it's an idea nonetheless. After wave X, you then get a preferably flat structure in a wave Y. Zigzag in W, wave X, flat in a Y. Sideways WXY, which is significantly different compared to a sharp WXY that I just explained. This is a double zigzag, which should be a sharp corrective structure. It most commonly is a sharp corrective structure, right? That's what you most commonly see when you talk about a double zigzag. It's a deep retracement to the downside, while a sideways WXY, right, also known as a double three, is a more horizontal corrective structure. Okay. Now, preferably your wave X is ending on a high amount of volume, which can lead to a fake out, right? Because people are going to be counting this as a wave 1, 2, 1, 2, 3. They're looking for continuation, but instead it halts and it falls back down. The increased amount of volume in the final leg can make people feel like we get continuation and move towards all-time high. This is the perfect moment for the market makers to fake the liquidity, meaning the buys are coming in, people FOMO in, you grab that liquidity, you drag it back down. Right? Then the first couple of people are going to be either liquidated or stopped, preferably because price takes out this low. Right? People love to put their stop losses below their lows and stuff. And then you get another leg towards the upside. And in this case, preferably your wave B of a flat, A, B, C, preferably B as a zigzag in a 535, once more, preferably on a high amount of volume. Getting closer to the all-time high, not taking it. This could be like an 886 touch, taken from the high to the low or to the end of W, right? This could be an 886 touch, and then you get a retracement. The 886, right, close to the all-time high, a second fake out, grab more liquidity, drag it down, stop losses, stop losses, stop losses, take the liquidity at the bottom, continue towards the upside. Well, interesting. Mainly because you you grab the liquidity at the top, which I always find very nice. And you actually see this, mind you, you see this relatively often, no? I mean, this was a double zigzag, to be honest, but you moved high, right? Close to the 886 from the high, okay? We go to another range. While ago, I know I'm on a 1 hour time frame. I should probably just go to the 4 hour. Look at this one here. Right? Move down, up 886, down, up 886, down, up 886 from this one to this one. So it's 3 times where you basically like fake a potential continuation to the upside, and 3 times you just take out the low, take out the low, take out the low. I mean, got to be aware of such scenarios, no? So it's very interesting. Okay. Second scenario done. The similarities between the 2 scenarios covered is this structure. Up, down, another leg up, right? Up, down, another leg up, but this leg up is going to be longer. Cool. This is the most boring scenario where we have again, zigzag down in W. We get a WXY to the upside in a wave X. It's exactly the same as the previous scenario. But then instead of a flat ABC, this becomes a triangle. And then we look for continuation to the upside. Yeah, what to say? You just go sideways. You don't take the low. You don't take the high. You just move in a sideways line. It could confuse people, but triangle initially doesn't have the same probabilities as a flat in a wave Y. You preferably get a flat over a triangle, but it's a possibility. I just present it. These two scenarios, this one here, right? Stop Koen with the right W, X, and then a flat in wave Y. And the triangle, WX triangle in Y, it's the exact same scenario except for Y. You go sideways here, and in the other one, you get a flat. So in both cases, you take out X, right? You look for price to move up. Okay. Right. So this is... Wait, is this an old scenario that I have on my chart here? Where's my diagonal? Is it... Oh, okay. Let me cover this one in a second. Most bullish scenario, this is where time is very important. Also, side note, in the previous scenarios I covered, we all look for a continuation to new all-time highs. I try to see, and that's also what I should explain as an analyst on YouTube, not being too detailed. Try to see the overarching directional bias with the scenarios. The previous scenarios I covered are all bullish, because you're looking at a corrective structure to the downside, being a zigzag, which therefore means you're going to be looking for continuation up at a later stage unless you get a bigger diagonal, which at the moment is completely irrelevant because it's way too early. Now, your most bullish scenario, same result, is what you see here. So we have AB and then a C diagonal, ABC and a 1, get a 2, a 3, a 4, and a 5. In this particular case then, right, after an ABC, we are looking for a 5, a 3, and another 5, which could be a wave 3. So you continue to the upside. In that case, you would have a 1, 2, 3, 4, 5, probably touch the 886, see a retracement in a wave 2, continue towards the upside, take out the high. However, can also be an ABC, so we don't know. It's just 5, 3, 5, and then we'll wait and see. So that's the short-term bias of this particular scenario. What is most important here, however, is time. You do not want this wave B or 2 to finish after the 6th time sitting on the 24th of August. Preferably, the 6th is already, quite a stretch. Preferably, it doesn't even move behind a 5 or, the moment you start to reach a 4th time is on the 23rd of August, 8 p.m. So that's tonight at 8 p.m. Right, that's the 4th time. Sunday, tomorrow, 2 a.m. Central European time, by the way, is the 5th time. The moment you start to move into a 4 and then a 5 and a 6, probabilities get slowly start to decrease. But I just put the 6 on my chart because that's the easiest one. That if you move beyond the 6, then generally the probabilities are low. This move up is a wave 1 or A, and the move down is a wave B or 2. Instead, probabilities for a flat increase, which means the previous scenarios covered, will have higher probabilities. Okay? Right, so keep an eye on time. Keep an eye on time. Let me have a look here, because this morning, my laptop had an update, and so I was updating, and I'm not sure if I saved my chart. So this might be a bit older. I think this was from yesterday, no? I don't know, WXY. A, B, C, W, that's your A, that's your B. And then this has to be a C, but that would be expanded. I don't like the A. We remove this one. So after covering the different structures, what are we looking for? Now, in the short term, this looks incredibly messy, of course. But again, in a nutshell, double zigzag, range continues, move up, move down, another move up, finish X, look for another move down, okay? But short term, ranging, up, down, up. Second scenario, up, down, bigger up. Third scenario, up, down, again, bigger up. Fourth scenario, up, down, bigger up. So in the short term, the probabilities are highest to see an upwards movement after the retracement, mind you, right? So we have areas of support to the downside. Interesting to observe the reaction. But what we'd be looking for is we have the move up. We're looking for a retracement. Should be a three-wave corrective structure, preferably, right? And then we look, for price to move towards the upside again. Up, down, up. Even if price takes out this low for a flat ABC, we're still looking for up. The probabilities are higher to see an upwards movement in this yellow box. Up, down, get a second leg up. And preferably, your second leg up takes out this high that was created yesterday at 117.4K to also touch the resistance that we have just above us. Because we didn't. We didn't actually touch any of these levels, which is very interesting. And therefore, I still expect it to be touched, to be hit, actually. So that is the first part of the summary. Now, and then, of course, things become a little bit less, it becomes a bit more difficult to really predict it. However, what I write here is basically what we're looking for. If the move, right, yellow is up, down, up. Then we get to the blue box. If the blue box starts with down, we expect up after. I mean, it sounds like, makes sense. But you can see, let me drag the individual pieces. Here, this one goes down first and then up. This one here in blue goes up first, then down. This one goes down first, then up. So after you finish yellow, the next structure is going to decide the later movement. This can easily be the end of next week, right? Like we have time. We can just figure it out as price goes along. But you would in general expect either downwards into upwards or upwards into downwards, and we just got to wait and see what we get. It doesn't make sense to do Elliott Wave analysis and try to predict everything too far ahead of time. So we'll tag along and see with the new information what we get, and then we'll know what to expect in the blue box. And then we get to the purple box, but purple is completely dependent on blue. So yeah, just a bit of like a wait and see. So in purple, we're either looking for a range continuation or a move to the downside. The range is basically the triangle. Move to the downside is the flat ABC and a wave Y, or the double zigzag to the downside. So this is basically, in a nutshell, what we're looking for. And then as we get more information, we can become more accurate. But at the moment, the probabilities are highest for the yellow box to see a movement up. We got the movement up as per yesterday, right? So yesterday probabilities were higher to move up after taking out this low, which was actually pretty sweet. So we got the move up. We look for a retracement into support, right? And we'll have to wait and see which one holds. And if you do take the low, there's support here. But in all of these cases, I'm looking for another leg up. Just got to see what the retracement to the downside is. And then the target preferably is at least taking out this high to touch the resistance. Touching the resistance that we have just above price here could be the end of this correction. So from a trade management point of view, it's very important to be aware that this could be the end of your wave X and you look for another move to the downside and likely go towards 105. If you pass 118 and go to 120, 121, the probabilities increase for a more sideways corrective structure. Not moving to 105, but you're likely going to stay above 110-ish, right? It's more like a sideways movement where where's my levels here? Where this area, which interestingly still hasn't been touched, we took out this low, but actually didn't touch this area, could act as an area of support at a later stage. So you look for a more sideways structure and then move towards the upside without really breaking 110. You're probably holding this. So this is what I'm currently looking for on Bitcoin. And of course, it's a few different scenarios. Short term is relatively easy. What happens after, we'll just wait for price action to show itself, right? So I don't often do this, but if you enjoy Elliott Waves and being here, we're almost at 20K. Like we're so close now. We're so close. So, if you haven't, I never like say like, please hit subscribe. But when we're close to such a goal, like, holy moly, press the button. Okay, let's check what happens in the chat. Yes, sir. Welcome. Good to have you here, man. Happy ETH all-time high. Indeed. Man, how those probabilities played out on Ethereum, eh? I remember we were at 1K, dropped the video. Wait, you can just see it because it's the thumbnail. 1 second. Linktree, altcoin analysis. We go to Ethereum. Here, Ethereum low in soon. This was 4 months ago. Why Ethereum may be bottoming here, targeting 5K. This was when price was dropping to 1 point whatever K it was. And we had 2 areas of support. Very, very nice. We go up. And then my next Ethereum video was here. Is the Ethereum low in? And then I had my 1, 2. I mean, you can barely see it, I guess, on the screen here. But on the thumbnail, it says 1, 2, looking for move towards the upside. And now we actually took the all-time high. So brilliant. That's very nice. The power of Elliott Waves, eh? Power of Elliott Waves. Roland, what's up? Austria. Austria, beautiful. Absolutely beautiful. Sam. So Sam, he's probably still here, but Sam was actually in Austria recently, and he shares photos of his trip in the sports channel in Discord. No, it's beautiful. And Flotti lives in Austria. Also active in Discord, mainly in the elite area though. Mallorca, Spain. Around the corner. 1 hour flight to Barcelona. I don't exactly know where Mallorca lies in Spain. Sidiams, welcome. Boring triangle means more time for alts to run. Yes, that is correct. I'm also living in Austria. Oh yeah, wait. Of course. Geneva. Boring scenario triangle means more time for alts to run. So that's absolutely true. Yeah. 100%. Very good, Sam. Yeah. So actually Ethereum Classic. So I made a video on Ethereum Classic. When was that? I made the video on Ethereum Classic a couple of days ago, no? Oh, one day ago. Okay, yesterday. Oh, I made it yesterday. And yesterday price was down here. Well, it's not anymore, but you can kind of see what I'm looking for here at the moment is a 5-wave move up on Ethereum Classic. So on Ethereum Classic, you can see the thumbnail here as well. Looking for price to move towards the upside. Check the arrow. And yeah, I mean, here we are. We took out this high, so that's good at 25. Preferably look for another wave 4 and then another wave 5 to the upside. And then when wave 5 finishes, preferably around 26 would be nice. Not yet taking out... Where's the other high? Oh, wait, no. Yeah, so I would like to see 26 touched, hit the resistance that we have, take the liquidity of this high, possibly could be another retracement. So then you have 1, 2, 3, 4, finish 5, get a 3-wave retracement, which I expect to be shallow in that case. I don't expect it to generally go all the way down here, but then look for continuation to the upside. But as you can see, it needs to make a higher high on a lower amount of volume. If price moves up and volume is going to increase, which is going to be a challenge. I mean, look how high the peak is. But if it's moving up and volume increases, you might be looking at a 1, 2, 1, 2, and you're only starting a 3. Yeah, so now Ethereum Classic did very, very well there. So absolutely brilliant. Set break even and wait. Depends on your plan, no? Interesting question. Blazing Fury. When will we actually go up? The correction can be done. I just don't really expect it to be done already. So in this scenario here, yeah, you could be finished. I just don't really expect it to be finished. So here you have A, B, C to the downside. And then after your wave C, get another wave 1, 2, 3, 4, 5. Almost all-time high. So preferably you fake out the almost all-time high. You don't take it. You first move down and then you continue. Bearish scenario, once you take out the all-time high, is of course a flat A, B, C. But looking at this structure, I'd probably go for A, B, C, W, get a correction, X, A, B, C. That's your Y. Take out the all-time high and then move down. So I would expect a larger correction of this range, or a larger structure, a larger sideways structure preferably, or a deep structure to form before price moves up. Now, if we then talk about like timing, I mean, let's see the latest, use a little bit of fib time, but if we take the latest move to the upside, to the all-time high, let's toggle on the 382, the 3rd of September. Yeah, so I mean, basically August, sideways price action, probably a big portion of September in the beginning. You're still stuck between 100K and the all-time high. And then let's estimate that towards the end of September, October, you're moving up and taking out the all-time high, and you look for the final stretch in this bull market, basically. Yeah. It's actually relatively, Elliott waves can at times be relatively simple, where you create the all-time high, but if the movement to the downside is a lower probability motive wave, so either a diagonal or a multi-1-2 or an impulse, you're going to be looking for continuation. If the all-time high is in and we are looking for a bear market, we need a motive wave down. We need an impulse down, right, to get strong continuation. We need a diagonal otherwise, or just a bunch of 1, 2, 1, 2, 1, 2, 1, 2, and then boom, you go to the downside. As long as we cannot count a high probability motive wave, we're just looking for continuation. And recently, someone in the elite membership group in the lounge, I don't know who it was, but someone said that person now understands why I always say wait for a range to form, as the range will always give you all the information that you need. And of course, a move down is the beginning of a range, because price it doesn't go in a straight line. Eventually, you're going to get a move towards the upside. Price doesn't go in a straight line. Eventually, you're going to get a drop. And the range, right, that's where your opportunities lie. Because if the range is higher probability corrective in a bull market, you just create an all-time high. Higher probabilities corrective, you look for price to move up. Sure, it can correct in a W, XY, double zigzag to 105. Still looking for price to move up and take out the all-time high. So the first move down, like, it needs to be a 5 wave. And of course, from the all-time high, the first move down was a 5 wave. Motive wave, impulse to the downside. But of course, you need continuation. You need a 1, 2, 3, 4, 5. Or you need, as we covered, a multi 1, 2 and a deep wave 3 to the downside, which we didn't. We remain patient. No, there's no multi 1, 2 here. There's not really a diagonal here as well. So yeah, it's high probability corrective. Yeah. And then we look for continuation up. What would be the sideways here? 1, 2, 1, 2. Hello, Kun on macro. Would a multi 1, 2 invalidation would be 98K. I just don't want the macro structure to change. I don't care about the low here at 111.9. It's this one at 98. For the multi 1, 2, you preferably don't see that one taken. The moment you take out this low, it becomes a bit more tricky for bulls to see extended targets. So I don't really understand why so many Elliott Wave analysts are looking at a leading diagonal at all-time high. A leading diagonal, guys, is the lowest probability scenario between an ending diagonal, multi-1-2, and a leading diagonal. As per the theory, a leading diagonal is your lowest probability Elliott Wave scenario of the three. So I covered the leading diagonal as well, where I mentioned it's the lowest probability scenario, and it makes sense to cover a diagonal because you look at the structure, you're like, oh, yeah, it looks like a diagonal. And I also kept an eye on a diagonal. But of course, I mentioned in the recent video on the diagonals. Let me find it for the ones that like to watch it. Where was it? The latest one on the... Oh yeah, here, 4 days ago. It's the lowest probability scenario, a leading diagonal. It just... unless the multi-1-2 is invalidated, then you're going to battle between an ending and a leading diagonal, where an ending diagonal is higher probability than a leading diagonal. Yeah, I mean, it might play out, but at this moment in time, doesn't have the highest probabilities to count a leading diagonal. So I don't really know why online I see so many analysts looking at leading diagonal. If they know the theory, they wouldn't be looking at a diagonal as a first choice. But if you're moving down and you would take out 98, then I actually don't know if I have it in my folders. But of course, your bullish scenario is a multi-1-2 and you look for a continuation up in a 3. Now, the ending diagonal could lead to either finish bull market or it's an ending diagonal that's going to move you into a larger range, which is a wave 4. So you're going to be stuck here for a longer period of time. So then you count a wave 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, end of the bull market down. Which means you don't get very large, high extended targets. Basically, Bitcoin is just going to range for a very long period of time because you expect another 4. And that 4 is going to be similar to what you have here or what you have here, right? This one was a bit shorter in time, but you expect a larger sideways structure. So you have a 1, 2, 1, 2, 1, 2. You get your 3, 4, 5, 4, 5, 4, 5. Finish 5, bear market starts. And your bullish scenario, the moment you take out 98, like this is still bullish, by the way, because ending diagonal in this case is an ending diagonal of a wave 3. You don't get 4, you then get 5. But your bullish scenario would be the leading diagonal, which people label then as a 1. You get a 2, and then you go up in a 3. But it's a leading diagonal. At this moment in time, a leading diagonal here would be nice. Here it's a bit tricky. So it's an alternative for me at the moment, at this moment in time. And if you take out 98K, I'd initially be looking for a 4 and a 5 for the bulls. Alternatively, your bull market is finished, but like we know the local move towards the downside here is higher probability corrective. We're still looking for another all-time high, so I don't believe in an ending diagonal at the moment. Like end of the bull market, I don't see it. So currently, even if this would be counted as an ending diagonal, then I'd probably look for a 4, and the next leg up is a 5. And the bulls are looking for leading diagonal. They count as a 2, and they're looking for a 3. And guess what? The price action is exactly the same. And this only counts as long as you don't take out the all-time high. So if you drop from here into a bigger correction, taking out at least 98, still looking for price to take out all-time high initially, right? Unless this becomes a larger diagonal, then that's the moment you got to be cautious. But we don't talk about diagonals yet because it's too early. Too early. It doesn't really make sense to count a diagonal to the downside here. So yeah. So pretty much spoke about the higher time frame, I suppose. Another thing I think is important as well with regards to high time frame, low time frame analysis is that If on the lower, so we're on a 1 hour time frame. If on the 1 hour time frame probabilities are higher, it's corrective. You're looking for price to take out this high. And you can continue ranging, make another low, go to 105. It doesn't matter. You're still looking for price to take out the high. So even without knowing the macro, which I just spoke about, even if you don't cover that and we're not looking at it and you just focus on the 1 hour, when you patiently wait for a retracement to show itself and happen, right? Then you wait, even if you have very, very macro swings. I'm not a financial advisor, but this is like a way on how I regularly approach my stuff is you just wait, you wait. If this was going to be a multi 1-2, 1 2 1 2 1 2 3 4 5 4 5 4 5 4 5. Now there's a big impulse down. You wait for a 3-wave retracement, which is always going to come eventually. Selling area, get rid of all the bags, look for another move down to take out that low. Potential bear market start, or if this is an ABC to the downside, then we know, because as price then moves up, it will eventually take out this high, probably get another retracement. That is going to be add the bags and look for another leg up, take out all-time high. But at least you're safe. You're managed. You're not married to the asset. You're not trying to, like, yeah, of course, if you have a plan, if your plan was sell 120, sell 110, so stick to your plan, right? You made a plan, stick to your plan, reevaluate after you stuck to your plan for new entries, new opportunities. But the best moment to sell after this high, I always like to use this as an example. It's a great example. So the best moment to sell after the bull market of 2021 was here. This. Not the top. Not the top. Of course, you love to snipe the top, but you don't know it's the top. Of course, looking from a Elliott Wave point of view, you're losing steam, right? Volume is going down. Your overlapping price action definitely looks like a diagonal, even though I count it as a multi 1-2. No, there we go. Not a multi 1-2. I like 4 5s, 3, 4, 3, 4, 3, 4, and then get the final leg up in a 5. So, but you can see it's slowing down, but then you get the first move down. So of course, as you see this, you might already be prepared and think, it's probably a good idea to slowly start selling my stuff. But once you get this move and a corrective structure up, this is arguably one of the best places to then get rid of the bags. Because that's the moment you have proof of a impulsive move to the downside. You get a corrective move up. You're expecting this low to be taken. And then you wait and see what happens after. And then what happens after is you go down to 30K. And then once you're at 30K, you start ranging sideways. It's slow, it's ranging, and then eventually we go back up. So then you'll find a new opportunity to join again. But yeah. So at the moment, I still look for higher, really. Wow. So I see Tesla. I also see DOT. Let me quickly check DOT. So DOT, by the way, I'm expecting higher. So on DOT, I expect at least this high to be taken. Wait, didn't I make a DOT video recently? 1 second here. No, I did not. Okay, I have to make a DOT. It must have been in the altcoin where I covered 30 alts. So yeah, I'm expecting higher on DOT, at least 436. Once you take out this high, you're probably just waiting for price to take out the high at 468. And yeah, I mean, we're basically at like pretty much almost like all-time low levels, but take it step by step on DOT. So yeah, I'm expecting higher. You can count this as an impulse up, clear 3-wave structure to the downside. High has been taken here. So it's confirmed, 3-wave structure. Once the high is taken here, you wait for a retracement. That's the area to look for opportunities. Look for a next move up to take out this high, 1, 2, 3, 4, 5 on the lower time frames. So I'm looking for at least 467, to be honest. And then we'll take it from there, right? Step by step. Do you get an ABC or not? Because, geez, DOT has been a bit in a bit of a downtrend, you know what I mean? So take it easy. Next level of resistance, monthly point of control. If You can take out 5.38. Oh, there's definitely a bit of room to the upside. Wow, so much volume down there. 7, next area. Ooh, yeah, that's an important resistance here. 640. So that's your next. So level to level, level to level. But if you know Elliott Waves, you'll be able to manage things as you get more information. What's the volume doing? What's the extension doing? Because if these are a bunch of 1-2s at the moment, yeah, 1, 2, 1, 2, maybe you get another like 1, 2 here, but eventually you get a 3. If you get an extension to the upside, highest amount of volume, that's most likely your 3. You're just gonna wait. Sit back, relax, enjoy the show. 4, 5, 4, 5, and then you get that grinding, overlapping structure. That's the moment you're like, might be a good idea to, you know, get rid of some of my stuff, and then wait for the next retracement. Add on the retracement again, and then look for the next opportunity for the next bull market, possibly the next move. You know. Stocks. I actually rarely have a look at stocks. Interesting. So took out the all-time high. I'm not. So we have overlap. Where was it? So this is your low. We have a move down. This is your low. That's the high after the low, overlapping with this range. So if this is an impulse, you want to see a 1, 2, okay. 1, 2, 3, 4, 5, 4, 5. We never got this 4. You know what I mean? Like it's a bit dodgy because you like to see a 1, 2, 1, 2, 3, 4, 5, 4, 5. Now this counts better as an ABC. You get your wave A, you get your deep wave B, you get your wave C, but that's corrective. And we got to be aware that this is quite a sharp move down. And if we just look at it, 1, 2 with the potential of a 3, 4, and then a 5. Somewhere in here. So there's the potential of a 5, which means more patience, which means I would probably not touch Tesla for a little while till I get more clarity. Because if this is a 1, 2, 3, 4, 5, making the low, ABC to the upside, you expect another low. Now, if this is AB and this is a longer wave C, which we can't yet really confirm, then you get an ABC to the upside. So then you have corrective structure up, corrective structure, down, corrective structure up, which means that now you're going to start limiting your corrective probabilities. So in that case, if it would be an AB, let me explain where I would pretty much like look for entries for the bulls. Like at the moment, I wouldn't be interested for a new position unless it's local on lower time frames. But here I am on the daily, weekly, not on the lower time frames. Lower time frames, by the way, this looks like a 3-wave move to the downside locally. And took out, so I won't be surprised if it goes up at least a bit further. I would like to see resistance on Tesla in this range here. So move back into the previous range, point of control somewhere here. Take a volume profile. So point of control 394, touch 394, look for retracement, ABC, And then you have your W. You get your X, you get maybe a wave Y, up, and then you move up. In other words, I would look for a larger range, same as actually on Bitcoin. I'd probably look for a larger range here, and at a later stage, come back to Tesla and see what the range has given us, and then based on the information, you pretty much like get a better idea. Because at the moment, like if this is an ABC and not an impulse, for an impulse it's a 5, look for a 3, 5. That's easy, ABC. If this is corrective, it would be bullish, but it's difficult to give it the highest probabilities compared to an impulse 1, 2, 3, 4, 5, because it does look like an impulse. But if it is an ABC with a long wave C, which can happen, we want more information. at least too long. So in that case, we either label this a wave W or A. We look for a three-wave structure up in either your wave X or B if you take out the high. And then you get a move down in either C or Y. Continuation of the range, wait for information, and then look for entries at a later stage. On the daily time frame, Tesla is not too interesting yet, because I need to wait. Is this a 3 or a 5? Because it looks 5-ish. And the moment you cannot count something with a high probability corrective, like from all-time high, is this high probability corrective? We can't say. We can't say this is a high probability ABC because it looks like a 5. So that means that I now know as a trader analyst, okay, because there's the potential of a 5, if I want a long, I need to wait. I need to wait because I either expect another drop or a larger range. And if the range gives me more information, which then leads me to believe we go up and this is a W, I can enter at a later stage. At the moment, it's not too interesting. I wouldn't really be looking for a flat here and like A, B, C to the downside. That's a running flat, which is the rarest flat. And after an A, B, C, by the way, you also want this to be an impulse up. But higher probabilities, this at the moment is a ABC. You do have overlap between 1 and 4. So, of course, we could see a triangle here. 1, 2, 3, 4, 5. Triangle wave A overlaps with wave 1. Overlap between 1 and 4 is an invalidation of an impulse. However, as per Elliott Wave International, specifically Kennedy, allows overlap between 1 and 4 as long as 4 does not end in overlap with wave 1. Take it with a grain of salt, but yeah, in that case, you'd still look for a continuation of the range because it's 1, 2, 3, 4, 5 resistance. Look for a 3-wave correction down. And that's the moment where if you get a 3-wave move down here, you look for price to take out this high and then the potential to take the next one. Okay, guys, it's 12:05. I gotta move because we have lunch coming, so I can't really stick around. So we're gonna visit family. Let me scroll down here. Could it be ending diagonal, but 5th wave isn't in? Yes. I covered the, thank you, by the way, at Tom Mate. So yes, that's possible. I covered it. Where are we now? We're now minute 58. I think I will put timestamps in the live stream, but I think if you go back to minute 40, 35-ish, 45, somewhere there, between 35, 45, I was talking about the higher time frame. So, and that also includes Blazing Fury, the multi-1-2 I shortly covered there. SFP indeed stands for Swing Failure Pattern. Update about the compendium. Yes, I am in touch with an editor through Readsy. So I now really want professionals to look at it. We're almost literally finished with what we want to do. Only some final pages left, pages on truncations and channels, some like the final pages, glossary, and I don't know, like that sort of stuff. I also still want to add a page on someone I met in March, Robert Trechter, but I have him. I want to call him, but I first need to finish the book before I call him, so I can send him a copy. And then ask Robert for a couple of stuff. See if he's interested. So that's still happening as well. And then I should be like I'm aiming for the 1st of November because the 1st of November is close to the end of the year. Last year, I remember many people said, "Yo, can I get it because I want to give myself a present for Christmas or for whatever party someone someone is celebrating." And it would be a nice timing to give people a present from me after years of work in the compendium now. How are you able to really analyze with 100% distance of emotions? Experience, practice, work on your trading psychology by, get the book, Mental Game of Trading, and do the exercises. Learn about yourself, about what happens if it goes wrong, right? Where does it start? Because it's not from 0 to I FOMO in a trade. There is a build-up before you FOMO in a trade, as an example, or get greedy. So what are the steps before you get into the wrong trade, for example? And you got to be able to intervene the moment you recognize those stages, those steps. You got to be able to recognize it. But experience counts. And again, if you have a good plan and if you trust what you're doing, that's already a big plus. So okay. Would you so post and pre-market, so stocks limit, you have limited information, but it doesn't matter for my counting when I look at the stock chart. So you can still see the general movement of the stock, which is important. So the few candles that are missing and stuff are not a big deal for me to count the chart. Yeah. Okay. I already ordered the book. Nice, no joke. Make sure to order mine as well soon. Okay, guys, I'm going to be out. I'm going to eat my cookie. I didn't have time. This is honestly the best cookie. Man, it is so good. And my wife made it herself. How about that? I wish you a great weekend. It was a pleasure being live. I analyzed Bitcoin, analyzed some answered questions, had a look at DOT, at Ethereum Classic, at Tesla. I'll put timestamps in later because now I gotta go. So when I'm back from lunch and whatever we're gonna do today, I'll be back and I put on the timestamps. But I should probably share a couple more updates about the compendium, so I'll make sure to prepare a message for YouTube in the post section and Discord and Telegram so that people get an idea of what we're working on. Because we've been working on it for currently 1 year. And probably a bit more than 1 month, so almost 1 year and 2 months. So it's a big project. It's the biggest one I've done in this space. So it's going to be really cool. So thanks everyone. Hopefully you're going to have a great weekend. Speak to you soon again. Trade safe, right? Make sure to touch the grass as well, and we'll see each other soon again.